Today's topic, should you refinance your student loans? That's right, another student loan topic. If you joined us last week, we had the awesome privilege of hosting Andrew Paulson from studentloanadvice.com, a white coat investor company, where we got into it. We got into a very long conversation, as we do with all of our interview topics on student loans. Today, we take it a little bit more towards those of you who may be looking to refinance towards the private side. Right. So there's pros and cons here. We're going to list 3 pros, we're going to list 3 cons and kind of give you some food for thought. But with the one big beautiful bill passing by the time this goes live, let's just call it early July, right? So we had a great episode last week with Andrew. Now we're going to pivot a little bit this week onto that student loan side on the private side. So pros, cons, food for thought coming up next. All right, before we get into it, quick favor to ask. As you know, I always plug it in here. If you have not subscribed to the channel, subscribe to the channel. Get a beautiful video like this one every single week. Thumbs up, spread the message. Bell icon every time we release a new video like this one weekly. Get a notification that we are live. Also, a new plug. If you like the content we're putting out there and you're looking for a financial advisor, check us out. Schedule a free icebreaker call at any time right on our website. Right in the top corner, you will see it, wealthkeel.com. That's it. That's the pitch. All right. Why are student loans everywhere on YouTube and social media right now? Well, it's because, again, the one big beautiful bill passed early July. We also have very breaking news, but at the time I'm recording this, that interest will start to accrue again on the SAVE program as of August 1st. So for most of you, you have probably not done anything with your student loans for years, literally years. And now all of a sudden, turn on the fire hose. Here we go. Get ready. So again, last week we had a great episode with Andrew. That one, we really probably focused a little bit more on the federal loans in terms of public service loan forgiveness and really dug into the effects of that and really on the physician community. Today, I want to take it a little bit different and get into those of you who should be maybe thinking about private loans. Now, I will likely say this numerous times during today's video. This is something that cannot be undone. So if you have a current federal loan now and you were thinking about refinancing it to a private loan, it cannot be undone. There's no oopsies, didn't mean to do that. Once it's done, it's done. And that is extremely important for a lot of the things I'm about to walk through. Now, there are plenty of benefits to doing this as well, but I just need to emphasize with everything I can emphasize that once you do this, there is no going back. So you need to make sure that this is not just, a quick decision because of something you saw on a TikTok video or you saw on the gram, whatever the case would be. You need to make sure that research has been done here. So even if you need a separate student loan only review, check out again Andrew from last week at studentloanadvice.com. Again, a white coat investor company there. But let's go through the pros. What are the possible pros to refinancing a federal loan to a private loan? And let me put one little extra caveat in there. If you already have a private loan and you're looking for a lower rate, that's not who I just yelled at, right? If you already have a private loan, you should be shopping. You should always be looking for the lowest rate. Moving a private loan to another private loan is not our concern. And if you have a private loan from when you were in school, you likely have an obnoxious interest rate. So now is the time to go look for some of those lower refinance rates. Through the Physician Sense podcast, my podcast side of this and YouTube channel, we have a good relationship with Laurel Road. They have really good rates out there. Again, if you have questions, drop them in the notes below. Happy to share their link as well. Or you can go to the Physician Sense website and we have all that listed on there. So that group we're not concerned about here, but all these benefits still apply to you. So pros. One thing that we see most often, and really the main reason why we're looking at this, is lower rates. So if your federal rate is 6 or 7, but you go get a rate check from Laurel Road or any of the other SoFis or any other providers out there, ideally you're going to get a decently lower rate, possibly much lower, right? Depending on the duration of that, so the length of it. The longer the term of the loan, the higher the rate. The shorter, so like a 2-year loan or a 5-year loan, is going to have a lower rate than a 20-year loan because there's not as much time for risk, right? But we are seeing rates, 3, 4, 5% in the private world. So if you're sitting there with federal loans at 7%, maybe getting a 4%, that's a big win. Now, I will say the quicker you plan to pay them off, good for you, good problem to have, the less benefit you're going to have from the overall side of the interest difference. All right. So if you go pay off the loan in 2 years and you got that lower rate, great. You're not going to have as much of a savings from that lower rate because you paid them off more aggressively. I'll take that route all day, right? That's still a good win. Then let's look at some of the other benefits on the lower rates here too. So like I said, if you go with a shorter duration, so 3, 4, 5 year loan, I'd label that as low duration, should see a lower rate there. If you're going 10, 15, 20, could be a higher rate there. For our main demographic, physician community, if you are going for private payoff, we usually like to see you pay it off sooner than later, right? We want you to be pretty aggressive here. Now, one caveat there is if you go to get quotes, you go to get rate checked, right? And the 5 year rate is very similar to the 7 year rate. If maybe they are the same, we would usually say, think about taking the 7, but pay it like you're going to pay it off in 5 years or sooner. Because all that does is it's going to add a little bit of flexibility in there for you, right? If you need to pay lower for a certain period of time, you'd have that option. And that's going to make more sense when we walk through some of the cons below. All right, so another pro, it's simplified, right? If you had 20 federal loans and you get them all consolidated into one private loan, much easier to manage, right? You get everything in one spot. You sign into Laurel Road, you see it, great. You'll sign into SoFi, you see it there, great. It's going to be a lot more simplified. All right. So that is definitely a benefit of the private side. Now, with that, there's still cons coming, right? Going through the good stuff now. There's still bad stuff to come. The third one we listed on here was faster payoff. Now, I will, in full disclosure, right? You that might not happen. I'd like to think it will because you watch our videos and you're very in tune with these things. You know how to do all this. But could you technically pay them off longer? You could, right? If you get a longer loan, slow play it. But ideally, if you're going this route, like I noted earlier, you're going to get a lower rate and preferably you're going to pay a little bit more aggressively, right? We want to get these loans out of our way sooner than later. And while 5% is much better than 7%, it's still not free money per se. Now, if you're one of the blessed ones out there that refinance, many years ago, and you're sitting there with a 1 or 2%, and we do have clients with those rates, that's pretty darn close to free money. Let's just say we're not rushing to pay that off. 5% still in a spot where you should, work to get that out of your way. Clearly, there may be other priorities, but that's one that we're working to get out of our way. So, in short, there are definitely pros to doing this. Without a doubt, there's pros to doing this. But whenever you do this, there is no turning back. And that's what we're going to cover next here on the cons. So what are the downsides, Chad? You just made that sound so great. Why the heck wouldn't I do this? You have a lot of safety nets. So these are things that you would lose, right? You have a lot of safety nets with federal loans. There's essentially, you would lose any hardship help. So if you lose your job, forbearance, things of that nature, death, disability, let's go with the disability side, you're going to have provisions in your federal loans that give you ways to make very low payments or no payments. You would lose all those options, right? Private loans are very strict. Now, you should always read the promissory note. So whenever you take on a new private loan, there's something there called a promissory note. They'll have what happens if you do die. Now, if it's just you, there's no cosigner, which is why cosigning is, you need to really think through ever having a cosigner. Likely nothing's going to happen. Now, some of them will put in scary language. They're going to go after your estate, but there's nothing in your estate. You don't have to worry about it. But if disability is more common, right? If that's going to occur, what happens there? Do they still make you pay payments? Do they maybe give you some leeway there? Read the promissory note. Understand how all that works. With federal loans, you can control your payment structure a little bit more. With private loans, you're likely going to have a higher payment. Federal loans are usually spread out over a much longer period of time. You could be in an IDR plan, an income-driven repayment plan, right? So you're likely going to have a higher payment. Now, I'm listing that as a con. You could argue that might also be a pro, right? If you're trying to get it out of your way sooner, great. So that is another one you got to keep a close eye on. And then most importantly, the one I keep emphasizing time and time again here at the start of the video, the middle of the video, and now towards the end of the video is you lose your federal protections. So not the safety nets, but the federal protection. So what do I mean by this? You don't have options for an income-driven payment plan. You will lose public service loan forgiveness. You can never go back and get public service loan forgiveness. So if you're sitting there thinking, well, worst case scenario, I leave the hospital and I go private sector, well, then I'll just move, but then I go back to the academic medicine or the VA, then I'll go back. Can't do that, right? You can't refinance them backwards. So once you leave a federal loan, this ship has sailed. Not only do you lose PSLF, but any of the more traditional forgiveness, like the 20-year forgiveness, the new REP program will be a 30-year forgiveness. You lose all of that. I know I noted forbearance and the safety net forgiveness. So those are the main things. No IDR plans, no PSLF, no traditional forgiveness. That ship will sail. So again, we also emphasize this for even our physicians that are like, Chad, finishing my fellowship, I'm going private practice. I'm never going back to academic medicine. No way, man. No way. Private for life. And then they get there and year or two into it, they're like, oh my gosh, I hate this. Partners are not what I thought. I didn't get my floor seats at the Lakers. This is crazy, right? Didn't get the Lambo. I'm going back. I'm going back to academic medicine. That's where I'm going. Can't go backwards, right? So even we'll tell some of our physicians, hey, maybe give it a year or so before you completely commit to private loans. Yes, we might pay a little bit higher interest rate. I get it, but we can at least fix that. We can't undo going to private. So just keep that in mind. So in short, who should not be refinancing their loans? Federal to private. Well, I'll give you a few. If you're going for public service loan forgiveness, this is not the video for you, right? Do not do this. If you are going for traditional forgiveness, probably not for you. Now, I will say, run the numbers on that, right? Make sure you're running the numbers long term. Really hard to trust something. If you've learned anything in the past few years about student loans, who the heck knows? Which is also, you could probably list as a reason to always be careful moving to private loans. While it doesn't sound great right now, who knows? Few years, who knows what will change? But you can't go backwards on that. So just remember that on the PSLF side of things. And then that traditional forgiveness, as I noted too, like that's a 20-year commitment, a 30-year commitment with the RAP program. So if you're going for one of those, refinancing is not your goal here. If you're in training, who knows where your life is going to lead you? So whether you're a resident, intern year, or your first year as a fellow, probably not the time to make this type of decision, right? Even when you become an attending, as I just noted, right, maybe give it a year or so just to make sure you are going to be full private sector. And the other one we listed on here was, just not knowing the future, right? If anything is unstable in your life, income is moving around a little bit, not 100% sure of my career path right now. There was some layoffs in my department. I think I'm safe, but I'm not safe. The reason why we note that as our not group is because with those private loans, you don't have the same flexibility as you do with federal loans. So you want to make sure you're locked in, right? Who's our maybe group? I'm not even going to say it our locked in group, right? Because it's never locked in, right? There's always, we have clients where we've run the numbers and we've said, hey, it makes a lot of sense to go to private loans, but they'll still say like, hey, I realize I might miss out on $30,000, $40,000 of interest, but I want the insurance of federal loans. So that's important here, but we'll label this as our maybe group. Maybe if you are not going to go, let me rephrase that. So if you know that there is no public service loan forgiveness, you are 100% convinced that you will never go for PSLF. That could be because of your career path, or you just don't believe in the program, or you don't trust the program. That used to be a bigger concern when I was doing these calls probably 5 years ago. Now everyone trusts the system. I say that when we have more concerns now, at least if you're entering medical school and what PSLF looks like going forward. We're still waiting for major overhaul announcements, at least as I'm recording this in, call it mid-July. So maybe if you know you're not going for public service loan forgiveness or any other traditional forgiveness for that matter. If you have solid income, solid career path, you're not worried about big shifts, maybe, right? This could make sense for you. So again, I'm going to label that as my maybe group, not my locked in group, because still there's, as I noted there before, if you run the numbers, some clients still are comfortable paying a little bit more to have the backing of the federal loans. So not a hard yes. I would say there's certainly hard no's. At the end of this, what payment plans do we have left? Well, when this all shakes out, it looks like we're going to have old IBR, new IBR. If you're wondering what the heck's the difference between old IBR and new IBR, it's more or less the dates of you took your loans. And then we will have the RAP program, which is the new student loan program, which it looks better than what I think most are concerned about. Now, I will say RAP's based on 10% of your discretionary income, but the way they do that calculation, believe it or not, even with the IBR using 15%, you might still end up with a lower payment there. So if you're watching this video and you're completely confused, Like I said, last week we had Andrew Paulson, studentloanadvice.com, White Coat Investor Company. They do student loan only planning, right? So they can review your student loans and help you on that path. This is stuff that we do for all of our clients, but we also are full financial planning. Student loans are just a piece of that pie. So there you have it. Should you refinance your student loans? With a focus really on the private side of it. Last week I said we covered in depth really the federal side of it, kind of the major updates in there, and really a lot of public service loan forgiveness. So there you have it. As always, thanks for hanging out with me for the last 15 minutes or so. Questions, comments, hot topic, probably a hot topic for the foreseeable future, drop those below in our show notes. We also have that link that you can send us a Google form note as well, and then that's where we can also answer that. But we love your questions, especially on hot topics like student loans and even some of the tax planning updates that came with the One Big Beautiful Bill. That's it. As always, I will catch you on the next video.